Not every cost a business pays works the same way on paper, and where it gets recorded changes the entire picture. Last episode, we defined net income, the profit left after all costs are deducted. But here's a question that naturally follows. When a business spends money, does it always get deducted right away? The answer is no, and the reason comes down to a fundamental accounting distinction: expensing versus capitalizing. In this episode of MoneyMind, we're defining both and walking through what each one means in practice. To expense a cost means to record it immediately, in full, on the income statement, in the same period it was incurred. It reduces revenue right away. Think of everyday operating costs. A business buys office supplies, pays a utility bill, runs a marketing campaign. These are consumed quickly. Their value doesn't extend beyond the current period. So they're expensed, recorded now, deducted now, done. To capitalize a cost means something different. Instead of recording it as an immediate expense, the business records it as an asset on the balance sheet. Why? Because the item being purchased isn't consumed right away. It delivers value over multiple future periods. A piece of manufacturing equipment, a building, a long-term software license. These aren't used up in a month. So their cost gets spread across their useful life, rather than hitting the income statement all at once. That spreading process has its own name, and we'll cover it next episode. Picture a delivery company that spends $60,000. If that money went to fuel and driver wages, it's expensed. The income statement takes the hit this period. If it went to a new delivery truck, it's capitalized, recorded as an asset, with its cost distributed across the years that truck will be in service. Same dollar amount. Very different impact on the financial statements and on how profitable the business appears in any given period. Expensing records a cost immediately. Capitalizing records it as an asset and spreads the cost over time. The difference comes down to one question: does this purchase deliver value now or across multiple future periods? Next episode, we go deeper into what happens after a cost is capitalized, how that asset cost gets allocated over time through depreciation, amortization, and depletion. If this episode helped you build your financial vocabulary, subscribe to MoneyMind. A new definition drops every week.